you speak out a different sound. I'm not here to bring you down. Stepping away. I'm not alone. Stepping away. I'm not stepping away to give you room to roam. I'm not here to keep you still, just keep you warm. Stepping away, give you the room to roam. I'm not here to keep you still, just keep you warm. Stepping away. Sometimes my arms can irritate. It's just a fear for you to breathe. Never here to complicate. Maybe someday it will come again. The breeze of life, like way back.
Good evening and welcome back to a Friday night live stream as the markets seem to be crashing all around us. It's been an eventful 7 days as Bitcoin tagged just sub $81,000 earlier today. We're back in the 80s. We have basically retraced about 12 months of gains and everyone is freaking out. Sentiment on Twitter is at all-time lows. And yeah, I think people are just coming to terms with a 30% correction in a bull run. We're going to talk about a lot of news stories tonight. I've got loads of tabs that I'm going to go through. I'm probably going to do a lot of talking rather than looking at questions, but I will try and get to questions if I can. But really, the whole point in tonight is just to kind of paint a picture of what is going on, what is driving the market down, and why, despite all this, we still think there's a lot of upside, still bullish. It doesn't really change too much other than the fact that obviously the cycle's going to last a lot longer than maybe anticipated. 4-year cycle for me is done. Hopefully that can kind of be put to bed this year, and it just means that it doesn't drag on into 2026, 2027. So that'll be pretty bullish actually long term. There's a few news stories that are just pure FUD, and we will cover them as well and we'll talk about it. We'll start with Bitcoin on the weekly chart. Everyone is talking about this. We've spoke about it a few weeks ago on stream. I think I dropped the chart in CC Pro as well to show that RSI is now at the lowest level since 2022. The last time we were down at these levels on the RSI was back in this period here. FTX had just collapsed. The bear market was in full swing. The Fed was tightening rates and crypto was down at $15,000, which was probably about 50% lower than most people thought the bear market low would be for 2022. Back in 2021, everybody was speculating that 30k would be about the bottom, and obviously we thought the top was going to be 100k. The Fed started hiking at the fastest rate in history. Liquidity got drained out of the system, and then we had all the other issues with Luna. We had FTX. We had the Grayscale trade unwind, and eventually we settled around $15,500. So RSI at a very, very low level historically. If we look at the 3-day chart, you can see we are now in oversold territory. We've not been in oversold territory since June of 2022. So even before FTX, we're actually lower on the 3-day time frame than after FTX, which says a lot. And then on the daily time frame, we are completely oversold. Lowest level we have been since August 2023. All in all, it just tells you there is absolute zero momentum in the market. Sentiment is basically telling us that as well. And alts are getting absolutely crushed as Bitcoin retraces. We're now down about 35% since the start of October. So that's why it's so brutal. It is such a fast move, 36%. But I did kind of mention this in the chat room in CC Pro earlier today. We'll take off the RSI because we've kind of shown that. We've spoken for a long time that 2021 cycle was completely different from 2017. And for me, I've kind of always said that I feel like this cycle mirrors 2017 a lot closer than 2021 for various reasons. But if we look at 2017, we can see the previous all-time high in 2013 was $1,200. Once we broke above that, we actually had 3 pretty significant periods of correction on the way to an absolute parabolic run. So parabolic that it's actually impossible to get it on the screen and show you what I want to show you. So, in fact, we could just draw this line to show you. So this was breaking the all-time high back here in April 2017, and by December 2017, we were 15x higher, 10x higher, something like that. But the point of this isn't necessarily to show the gains from there. It's more the fact that in this bull run in 2017, we had 3 pretty dramatic corrections. So we had this one here. We corrected 39%, 39.6%. So let's call it 40%, 0.5% between friends. We then had this one, another 39.1%. And then we had finally, and this is the weekly time frame, so these corrections would have felt a lot more dramatic at the time. And then another third 30% correction. But once we got through that 30% correction, which also happened in November 2017, we went on to put in probably one of the most parabolic periods for Bitcoin and certainly crypto. You can see November the 13th to December the 11th, Bitcoin moved over 240%. Now, I know what everybody's going to tell me, market cap, it takes more capital, blah, 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 all that nonsense. My point in showing you this isn't to say that over the next 4 weeks we're going to move 240%. My point in showing this is to say that these things have happened before. This isn't the first cycle where we get a 30% retracement or correction, and it won't be the last. We'll have another 30% correction in the next 12 months. I'm pretty confident of that. So it also doesn't mean that it changes the trajectory of where the market's going. The market isn't going to not go as high because it's had a correction here. I see this all the time. I hear it all the time is I'm lowering my price targets because of how low we are now. That, to me, that logic doesn't make sense. Price targets are based off technicals, fundamentals, and most importantly, things like fibs and the buy pressure and the liquidity coming out of the market. Those things haven't changed. Nothing has changed about that. If 2 years ago when you bought whatever coin it was and you set your price target, the price target can't change because at some point in the 2 years since then, we've corrected 30%. That doesn't make sense. Logically, it just doesn't make sense. Now, if your argument is you just want out the market sooner rather than holding out, that makes sense, and I totally understand that. However, I'd just be wary of reducing targets just because we've had the 30% correction at this time in the market, because in 2017, we had a 30% correction, and it still didn't change how parabolic the crypto market went shortly after. So if we fast forward to right now, the difference is time. So we've spoke about this a lot on stream. We've spoke about it in CC Pro. The biggest change in this cycle is everything is more exaggerated. There's more time between corrections, and the corrections seem to bleed out over a number of weeks instead of just being over in a couple of days. To me, that is absolute torture. However, it does allow you not to panic in the moment. So in 2017, if your portfolio dropped by 50% in 24 hours, even the best investor would freak out and panic a little. When it drops 30% over 6 weeks, you kind of come to terms with the fact that, and I see it today, sentiment today in CC Pro is a lot better than it has been over the last few weeks. And it's because people have just kind of came to terms with, okay, well, we just need the market to bottom, and then we can start going higher again. And let's just get it over and done with. And let's just ride it through, turn off our notifications for a couple of days, maybe take some time off for the charts, and then I'll come back and see where we are at. Whereas when it happens in 24 hours, it's much more brutal, and it's much easier to make a mistake or make a stupid decision with all the emotions. So if we look at this cycle so far, since we broke the all-time high, we'll put in this correction period here, but you know, we've had this here, which was 33%. This led us to the August 2024 low that we've spoke to death about on this channel. We've then had this one, which led us to the April low, 31%. And obviously we know we're in the middle of our third 30% correction. Now, I'm not saying this is going to be the bottom and then we're going to pump 250% or whatever. My point is that we've been here before. These things happen. It's not uncommon. I'm sure if I go back to 2021, we can find similar examples. We had COVID, massive capitulation event. And even here we had, you know, January 2021, just 3 months before the all-time high, Bitcoin corrected 32%. We then had a 50% correction in the summer of 2021, 55%, before we went on and put in that all-time high. So my point isn't what's coming next. My point is this is just part of owning a volatile young asset. That's it. So you just have to be prepared. Unfortunately, that's literally the life of owning crypto. It's volatile, it's highly speculative, it's going to move like an irrational asset. However, I've showed this chart before, and I'll show it again. If we go back and look, Amazon went through the exact same periods. Look at the Amazon chart. So this isn't just a crypto thing, this is young assets have the same volatility. 32% correction. 32% correction. This one here, is this COVID? No, this is even before COVID. This is 2008. 62% correction. Up here, this is going back to 2014. 30% correction. This is Amazon stock. Remember, stocks are meant to be stable, not move as volatile as crypto. It's nothing to do with the asset. It's to do with the maturity, the market cap, and how young the asset is. And unfortunately, regardless of what you think about crypto, we're still in the very early stages of crypto. Very few people own crypto. Very few people even know what crypto is. If you stop a random person in the pub, they will not be able to explain what crypto is to you. So unfortunately, that means that you get the early stage gains, but you have to put up with the 30% corrections. And that's all we're living through right now. Is it deeper than I expected? Yes. Is it worse than I expected? Yes. Is it annoying? Of course. But it is part of the plan. So, yeah, that's where we're at. I do think we're in the process of kind of working out this weekend whether we're going bottom or not. We'll cover why I think that. I do think 74 to 72k is that last kind of liquidity zone that we might try and tag. If we do go down there, I wouldn't be surprised if alts held up a little bit better, simply because like I don't know who is left to sell down here. if you look at some of the alts, they're like literally at their bottom. So nobody's selling now. Bitcoin, there's still people that will probably be in profit. So, yeah, let me jump into the chat and let's see who's all in, and then we'll run round the stories. I think I've got like 12 different articles to talk about and just try and paint a broader picture and alleviate some concerns. Let's see. So Alex is asking about Vantage. Yeah, we're going to drop that over the weekend. We just want to get the message out about TGE. Usman's asking about the run up to the midterms. I've said before, it's going to be bullish. They've told you it's going to be bullish. They're going to pump the economy. They're going to run it hot. Trump, Besant, Howard Lutnick, they're all on CNBC every week talking about this massive economic boom that's coming. They need to win the midterms. If they don't win the midterms, America is going to be a disaster for 2 years. They need to win the midterms. And the only way to do that is make people feel really good about the economy, feel really good about affordability. And the way they're going to do that is by pumping money into the system and giving away a load of free stuff. That is simple. And that's going to be bullish for all assets. Dex dropping some facts in the chat. And Dex spot on. That's exactly the point. Is in 2017 and 2021 we dropped like a stone. So there was two people. There was people that actually didn't have time to react because they weren't on their phone or whatever, and then there was other people that maybe reacted in the moment. This one's so drawn out. It's just literally beating people. It's like it's just draining people's enthusiasm for the market, and you see that in every Twitter post, YouTube video, Discord post. People are just drained of all enthusiasm for the market, and it's literally because of the time and how drawn out it is. But I think we'll resolve that very soon. And Jamie says some good buying opportunities, unreal buying opportunities. Lewis says he's worried about that Vara chat, but like every altcoin's the same. I think now's not the time to be paying too much attention to some of the smaller altcoins charts unless you're going dollar cost average, in which case there's probably never been a better time. Right, let's run through some of the tabs I've got just to kind of try and chat broader rather than just looking at the Bitcoin chart. So, Strategy's put out a statement. So if anyone's missed this, basically MSCI, which is a global index, put out on the 10th of October, strangely, that they were debating whether or not to include businesses that hold more than 50% of their value in a digital asset. Obviously, that would mean Strategy got delisted. The decision's not till the 15th of January. The actual announcement was on the 10th of October. No one even knew about it. Interestingly, the news has been dropped today. Is that signaling that actually all the smart money's already sold off because they knew about it, and this is just the final panic to try and shake retail out before we bottom? And it's kind of like, everybody's been debating why the market's selling off. Now they know why the market's sold off, but that's probably going to mark the bottom, and that bad news comes at the very end of the dump. And we've seen that before over the past. We've saw, especially with Binance, we saw BNB. The amount of bad news that came out at the bottom for BNB was just crazy, and basically that was just the final kind of test people's conviction. So Strategies came out and said they've got 71 years of dividend coverage, assuming the price stays flat. Obviously, regardless if we have a negative year or 2 negative years, long-term Bitcoin is going to appreciate in value because they're going to print trillions of dollars. So I think Strategy is going to be fine. I think this is a lot of FUD against Strategy. I thought I'd share this. I thought this was quite a good point, was that Simon, he's a VC in the space, quite well respected, but basically what he was trying to say is the long-term vision for crypto is so bullish, it's so overwhelmingly bullish about where crypto's going long-term, that it becomes easier to relax in the moment and just know what he holds. So I thought I'd share that because I thought it was quite a nice sentiment piece. This one could be big for Bitcoin into 2026. So one of the biggest challenges for the US government with a strategic Bitcoin reserve is that they can't use taxpayers' money to buy Bitcoin. If they did that, it would just be horrific. You've got people using food banks, you've got people on benefits, you've got people that can't afford to heat their homes, and you're using money to buy Bitcoin, which majority of the population either can't afford or don't understand. So they need to come up with clever or creative ways to accumulate Bitcoin. And Warren Davidson's came up with a way of allowing tax payments to be made in Bitcoin. And that would have two benefits. One, the US would accumulate Bitcoin, and two, people wouldn't have to pay any capital gains on their Bitcoin. So it's an easy way of transacting in Bitcoin. The bullish thing for Bitcoin is, one, that would also allow the government to hold it, which would mean that more of the supply is locked up because the US government's not going to sell it. So yeah, I think that would be really bullish. Also just another signal of intent to the market that crypto is here to stay. Eric, who I absolutely love, I think he posts some great stuff, Bloomberg analyst. He tweeted this, I think yesterday, that, or 2 days ago, that BlackRock has now filed for a staked Ethereum ETF. I've said for as long as I can remember, Ethereum staking is going to be game-changing for Wall Street, and there's going to be massive demand for this product. The criticism of Bitcoin is you can't actually earn a yield just by holding it. Well, you can with Ethereum. And the reason why this is bullish is because when BlackRock wants something to happen, it happens. So this Ethereum staking ETF is basically a foregone conclusion now that BlackRock have filed for it. That's going to be bullish for Ethereum, but also, again, bullish for crypto, and another signal that this market is not done. These are not moves that you would make at the end of a crypto cycle. These are not moves you would make as you're about to go into a bear market. And if BlackRock don't think we're going into a bear market, I certainly don't want to go against BlackRock. So I think this is really bullish. And kind of back to my point at the start is, if you ignore the price chart, ignore prices, and just focus on the fundamentals, there's never been a more bullish time in crypto. Let's have a look in the chat because I can see it going wild, but I'm not sure what's happening. Let's see. Strategy does pay out dividends depending on what product you hold. I'm actually dropping a MicroStrategy, Michael Saylor podcast next week, so check that out. It'll be in CC Pro for everyone. Let's see. I think everybody's just chatting to themselves, to be fair. Looking like end of next year. I don't think so. I think it's going to be well before the end of next year. I think first half of next year. And the reason for that is the whole thing that Trump and his administration want to do is be bullish going into the midterms. In order to do that, they're going to have to be bullish before the summer. The summer is like a write-off period for Wall Street, for trading, basically for anything like that. So, and by the time the traders and everybody, all the smart money comes back for their holiday, it's September, midterms are November. That's not enough time to get people feeling good about the economy. So for me, Trump and his team have to strike early 2026 in order to juice up the economy, just fling money at the economy as much as they can, get everybody feeling good, do something with housing to get the affordability down, and then that gives everybody time to like start feeling good and forget about all the negatives, and then they run it hot into the midterms. So yeah, I think it has to happen first half of next year. I think if not, then it just backs up at the midterms. It's too late. They won't have the necessary impact that they're looking for. Eric, again, so he shared this. I've been banging on about this for ages. AI is not a bubble. Nvidia posted earnings the other day where they said that they basically sold out GPUs and demand is never been stronger. The reason this is important, and I kind of put this in CC Pro, is AI and crypto are going to be tied very closely over the next couple of years. a lot of things that are happening in the crypto world and the AI world, they interlink so closely. But more importantly, if Nvidia posted weak earnings, it would kill the stock market. And if the stock market dumps hard, crypto's going to follow it. On top of that, AI is basically the bet the Trump and most governments, in my opinion, are betting that AI is going to solve the inflation crisis. So every government around the world is going to print trillions of dollars over the next 5 years. That is a fact. The only way to alleviate inflation, I believe, is they're going to try and use AI to drive down prices. So deregulation is a massive thing you'll hear all the time from Trump and his team. And the reason for that is they're going to deregulate energy and things like that to juice up the AI industry, because they believe AI is the key to driving prices down. And if you can get a productivity miracle that drives prices down, at the same time you're printing trillions of dollars, then prices should kind of even / go up a little bit, but not too much. That's why this is so important. That's why AI is key to everything, because if AI can drive prices down, and I believe it can, that'll give governments around the world leeway to print more money, which is bullish for crypto and assets. So if you are bullish on crypto and you want to see crypto go to the moon, you should be bullish on AI, or at least be rooting for AI, because it's going to hold the key, in my opinion. And to be honest, I think it will do what everybody thinks it will. All right, so one more, and then we'll jump out the chat, and then we'll come back to some of the headlines. Kobayashi letter. I wish I could learn how to say that, to be honest. Says that the US Labor Department announces that October CPI inflation has been cancelled. So we didn't get CPI. We're not going to get CPI. And basically, what they're saying is that the Fed is already using faulty data. Now they're just not using the data that they want to use. I don't see that as a terrible thing. I think CPI is massively manipulated and it's just completely flawed. So I don't think this is massive, but what it does do is it reduces the excuses the Fed have got for not cutting rates, because in my opinion the Fed are way behind the curve. I think they're about 1% too tight. And I think they're going to learn that pretty quickly, and they probably are right now. And they're going to have to play catch up next year. Eric again. So everyone keeps telling me AI is a bubble, and the Mag 7's a bubble, and it's about to crash, and it's reminding them of the .com crash. But what he points out is that the Mag 7's trading at a 36.8x times earnings. But the four main companies in the .com crash were actually at 80x. So double where we are now. So if we are going to replicate that, we've still got a lot higher to go and a lot more speculation to come out the market. All right, I've still got a few tabs, but let's jump into the chat and let's see what everyone's saying. Christina says, anyone buying Xborg? I think Xborg's a great buy. I think price today is amazing, and I think it will do very well. So yeah, I think Xborg's a decent shout. Harry's asking about the 4-year cycle. Is it not increased because they increased the debt from 4 to 5 years as we came out of COVID? So, in my opinion, it isn't. The 4-year cycle is a business cycle thing. So, it's not that the 4-year cycle is extended or cancelled. It's just that Bitcoin follows the business cycle. And we've not peaked, and we're not in the expansion, kind of the topping phase of the business cycle yet. So, yeah, I think we're going to see PMIs expand. I think we're going to see the ISM index start to expand. We're already seeing industrial production starting to rise. We're going to see small caps do a bit better as deregulation, the big beautiful bill, and QE start to come out in the markets. And then we're going to see crypto do very well off the back of that as well. Let's see. We know they have to print. They know they have to print. Quo bono? Don't know what you mean. But yeah, if Bitcoin and alts continue to crash, then yeah, I would be scooping them up. Let's talk about James Dorn. Keep it simple. Over the next 12 months, liquidity in the markets will increase. And Jim Bianco points out that the Fed is now much more divided than it's ever been. So, interestingly, if we go back a couple of months, Trump was on a massive rampage about Lisa Cook. He was trying to get rid of her. He was trying to sack her, and then she couldn't be sacked. Interestingly, she used to be quite a hawkish Fed member. She is now flipped and is now actually one of the ones voting for a cut. And Trump's now not on this rampage. So, interesting to see that flip. We have 5 Fed members that don't want to cut. We've got 5 that do want to cut. So we've now got Powell and Jefferson, who are kind of unknown. However, the chances of rate cut did rise today, as I think it was Waller or Williams basically came out. I might have it here. No, I don't. Came out and basically said that there's room for more cutting. And I think the biggest shift at the Fed is right now is there's so many coming out and speaking, but also they're using different data. So somebody will come out and say, oh, look at inflation, we're seeing inflation rise, so no cut. Then somebody else comes out and talks about the labour market, and then they're going to cut. Ultimately, they need to cut. It doesn't surprise me that today we got a very dovish statement, and this went up as markets sold off, because regardless of what MD says, no one, the Fed, Trump, no one wants the stock market to crack. And on top of that, you've got the Japan issue. So I put this up a second ago, but the Japan issue is massive. Japan are about to print, I think it's like a few $100 billion, but it's like 1 trillion yen or something like that, which doesn't sound a lot. But as a percentage of their overall GDP, it's like, I think it's like 1% of GDP they're going to print in the next like week or so, which is quite a lot of money. So the problem with that is that means their bond rates are going to rise. As their bond rates rise, and they're already at the highest level in history, it means that anyone that borrowed yen to go and buy US stocks and Bitcoin and crypto is then unprofitable. So basically the way the trade worked was people would borrow yen at 0%, switch it into dollars, and go buy assets that would appreciate at 5-6%. Once you take off all the exchange rates and the hedging risk, you probably clear 4%. But if you're trading $100 billion, that's a decent trade. Well, as the Japanese government stopped buying their own debt, the yields on their debt started to rise. That meant borrowing rates started to rise. So that 0% has now went to 3%. If you're only making 5 or 6%, take off the hedging, you're actually about break even, and it's just not worth the risk, because all it takes is something to happen on either side of that trade, and you're then underwater, which on a few $100 billion is quite a lot of money to be down. So the Japanese government have a real issue. Let me see if I can bring it up. I'm sure I've got the chart handy. We've covered this before because this happened back in 2024, which caused the August crash. But you can see the yen selling off. This is the weakest the yen's ever been versus the dollar. That was July 2024, just before we had that massive Bitcoin capitulation event. We've saw a similar thing today. And then we've got the Japanese 10-year, which is at the highest level since 2008. So if they just print, the Japanese bonds are going to rise, and that's going to cause massive global issues. If they print and buy their debt, that solves a bit of the problem, but then the yen's going to sell off. So ultimately, the Japanese government is in a no-win situation. They either print and have massive inflation, or they they don't print, and they cause a global economic meltdown. So, yeah, you need to pick your pill to swallow. But ultimately, Japan is causing a lot of global issues. And then lastly, my last slide, Ran, who I'm not a massive fan of, but this is the story about the digital asset trade, MicroStrategy, and all the digital asset companies. But ultimately, it comes down to this. MSCI is consulting on how to treat companies that hold digital assets as more than 50% of their total assets. The consultation period is now open, and the decision will be made on the 15th of January. There is no way this passes. There is absolutely no way this passes. And I'll tell you why in a second. But if you look at the time, 10th of October at 8:34 p.m. October, we started crashing. We crashed through here and we dropped to $102,000 Bitcoin, and we know what happened to alts. Insiders knew what was happening, no one else did. 6 weeks later, we all find out that maybe that's why the market sold off on the 10th of October. The reason this cannot pass, in my opinion, is the US government has openly said that Bitcoin and crypto holds the key to dollar strength long term, because stablecoins have to buy dollar-backed securities, dollar-backed debt in order to print stablecoins. Crypto is needed for the dollar to stay relevant, or at least the global reserve currency. Because of that, they want institutions holding crypto. They want institutions holding Bitcoin as a big chunk of their assets. And on top of that, if they can't hold crypto, they'll go and buy other assets. And some of that assets is stuff like property. And the US government doesn't want them to buy property because that forces house prices up. And the housing affordability is one of the biggest challenges for the Trump administration. So no chance this passes. It is a massive worry, especially for investors that hold billions of dollars worth of strategy, or are looking at other crypto companies that might adopt a digital asset strategy. However, I think, interestingly, the timing of the release today, as we drop to 82k, seems coincidental. Seems like we already have had the crash. Prices lead narrative, as always. It doesn't seem to fit that this would cause much more selling, because anyone that was smart and held Bitcoin in size is already sold if they wanted to sell. They're not going to sell at 80k. They sold above 100. So that's my 2 cents on the market. That is literally, in my opinion, everything we need to know. They're going to print. They're probably going to cut in December. I'm pretty confident of it. QT ends on the 1st of December, regardless of FOMC. It ends on the 1st, which is going to feel like an extra $55 billion coming out of the economy. The TGAs start going to get drained. 2026, they're going to rinse the economy. Whether you like it or not, they're going to absolutely pump the life out of the US economy to make people feel good, so they vote for them. They're going to have loads of free stuff out. And ultimately, everyone seems to be campaigning for socialism, so they'll probably get a taste of some socialist policies next year. They'll get loads of free stuff, and it'll be paid for by inflation, and then everybody will cry about inflation. That is kind of the way it's going to go, and we just kind of need to ride it out, in my opinion. Let's have a look in the chat and see, does anyone have any questions on anything I just ranted about, anything I believe in, or just want to ask questions about Alvara and Xborg? Yeah. Let's see. Now says, yeah, I've already read that. Ben, Fed all over the shop with the rate changes. Yeah, so the biggest change that's coming soon is Trump's going to announce who's the Fed chair starting in May next year. I think, to be honest, I think Powell's starting to lose his power. Not in terms of the position, but more the fact that the signs are glaringly obvious that the economy is struggling. Whether anyone wants to claim that the economy's not, there is a massive issue. The K-shaped economy that everybody's talking about means that rates being high only punish the poorer people in society. The rich with $100 million in the bank earn interest off rates being high. So the longer rates are high, the more wealthy the wealthy get, and the harder life becomes for the bottom part of the economy. So Powell is actually enabling or making the K-shaped economy worse. The top 1% can just chill with their millions of dollars in the bank earning 4 or 5%. Meanwhile, the bottom 10% who have to borrow for mortgages, car loans, credit cards, payday loans, all this nonsense, they have to borrow at really high rates because of Powell. And I don't think enough is made of that, is that the rich actually make more money when rates are high than when rates are low. So, yeah, I think Powell's coming under a lot of pressure. I think he's going to get more pressure as we run up to the December meeting. And to be honest, if I was a betting man, I would say somebody positioned the Fed speaker today to be as dovish as possible, because the stock market sold off early doors today. Then he comes out and says that rate cuts are probably going to happen in December. Stock market's up, Russell's up 3%, S&P 500 is going to finish the day green, not too far off all-time high, Nasdaq not down too much, and the Dow Jones up 1% on the day. That to me tells me that somebody is worried about the state of the economy, worried about the stock market, and at the end of the day, the US is operating a $2 trillion deficit. If the stock market drops, their tax receipts drop, which means that deficit expands. So they can't have that. Let's have a look. Any thoughts on Dasha Waifu? Cyrus had it in his picks in Swissborg app, but deleted it out of the bag. Yeah, probably trash. And Usman's asking when QE begins. To be honest, QT ending will feel a bit like QE, but I think QE is going to come pretty quickly. I think probably not in December, but January, February time, I wouldn't be surprised. Probably March. But I don't think they're going to necessarily go back to COVID-style QE. What's going to happen instead is, in my opinion, they're going to do like sophisticated QE. So they'll give grants out to certain industries. So anyone building like the power grid will have massive subsidies, massive grants, because that'll drive the AI boom. And that'll feed into workers' wages, that'll feed into local economies. So I think they're not going to just post out checks. I know that's been floated, but I think what they're going to do is they're going to give out loads of money to certain businesses. I also think they'll buy their own. They'll definitely be buying their own debt at some point next year, because they need yields much lower. And yields dropped off today, which is bullish, but they need them so much lower. They need the 10-year down below 3%. So. Or at least 3%. So they're going to buy their own debt. Niall says various global stimulus measures ready. Rip. They are. And the problem is the Fed. So I spoke about this before, but China in particular really wants to stimulate. They really want to print, but they kind of need to do it in coordination with the Fed. If they drop rates too quickly or stimulate their economy and weaken the yuan too quickly, then the disparity between the yuan and the dollar becomes so great that nobody will want to hold Chinese assets, so they'll just flee to the US. So they kind of need to do it together. And I think that's why gold's rising so much, and that's why China's so interested in gold, is because they can see a situation where the yuan's going to get absolutely obliterated, but they can back it with gold. But the Fed holds the key. It's the same with Japan. If the Fed reduces interest rates, it weakens the dollar, which takes pressure off the yen. The Fed controls the world, interest rates based, and once they start really getting aggressive with QE and rate cuts, everyone around the world will do the same, and the global liquidity will rise massively. The Fed has to be the one that kind of initiates it, because if you take the pound, for example, if we wanted to drop our rates by a full %, everything is measured against the dollar. So when we go to buy oil, it's measured in dollars, so we need to buy dollars. Well, if we drop the interest rate of the pound and the pound debases, then imports become more expensive and we need to import energy. So did Japan. However, if the US dropped their interest rates by 1%, QE, and the dollar weakened sharply, we can reduce our interest rates, we can weaken the pound, because we're not weakening ourselves versus the dollar. So it's all a big game, and ultimately, regardless of what MD thinks, the Fed have done an amazing job of defending the reserve status of the dollar. You can see the DXY double bottomed on this trend line, and it's shown some real strength. We're up, 4% since September. So yeah, the Fed is leading the charge in strangling the global economy for dollars, and that's making dollar more expensive, more valuable. But what it's also doing is it's suffocating central banks that can't relax their interest rates or their liquidity. So as soon as the Fed starts getting aggressive, the whole world will follow suit, and we're going to see global liquidity just go absolutely insane over the next 12 months. Christina says, would you be expecting a rip very high when the new Fed guy is in? No, not when he comes in. It'll be beforehand, because markets will front run it. It'll be hand chosen by Trump. It'll be somebody that totally aligns with Trump and is very dovish. So yeah, I also think whoever it is will share the views of Scott Bessent. So Scott Bessent's the Treasury Secretary, and one of the things he keeps pushing is that the Fed becomes forward-looking rather than backwards-looking. So right now the Fed makes their decisions based off economic data for the previous months, GDP, inflation, jobs, all these numbers, but they're all from the month before or the quarter before. Well, and I've argued this a few times, is what's the point in that? Because your job is to steer the economy where it's going, and you should be forecasting, not making decisions based on data from last month. You should be actually planning what's coming ahead, and what's coming is AI. AI is going to supercharge earnings. Howard Lutnick was on TV saying that he thinks GDP growth next year could be 6%. They're going to do that by money printing and fully embracing AI and the efficiencies it brings. Well, if that happens, there's going to be unemployment at 10%. The Fed needs to get ahead of that and try and protect the job market from that. Does the DXY not need to be below 100? It doesn't need to be below 100. It would be nice to be below 100, but the weaker the DXY is, the more bullish for crypto. So we can see just here, this was, where are we? So this is the 2020, so this was COVID. The DXY spiked, and then we went into a full bull run as the DXY softened. You can see here as well, this was pretty much the bottom for the crypto market at the top of the DXY strength, and obviously despite what everybody thinks, we've actually had quite a nice run for Bitcoin as the DXY sold off. And again here, this was this year, and obviously we saw Bitcoin rise and put in new all-time highs. So as soon as this rolls over and starts dropping, it'll be bullish for crypto. Christina says, one thing I can't get my head around is how does all the crypto go down in sync and up in sync? Is this market makers? Yeah, all of the above. It's algorithms, it's market makers, it's AI bots, it's all the same. So a lot is pre-programmed as well. So a lot of it uses, you can even train some to use keywords. So for example, Jerome Powell comes out at a press conference. If he says X, Y, and Z, sell Bitcoin. Like, that's how basic you can make them. But ultimately what happens is the market makers sell off. When Bitcoin sells, everything else sells off. Because typically you will see panic selling if Bitcoin sells off anyway. But it's all controlled by smart money. Market makers manipulate the market. That's why Borg not being on a centralized exchange, not using a market maker is bullish. And yeah, it's all controlled by these people like Wintermute and stuff like that. Yeah, Callum, it's the same with small cap stocks. So alts and the Russell do well when there's liquidity and froth in the market. And the reason for that is people want to take more risk. When there's more cheap capital in the market, people take more risk. And more risk leads to altcoins running, meme coins. We saw that when they juiced the markets ahead of the last election. We had the big rally. And although Trump was a big part of it, it was also to do with the fact that there was a lot of excitement about rate cuts. No, the top is definitely not in for Bitcoin. If the top's in for Bitcoin, the top's in for the market. But it's not, in my opinion. B Don said, am I stacking up on it? To be honest, I said this in CC Pro earlier. I want to see this weekend if we're going to get that final capitulation down to 72k. If we do, then I think also will be a little bit cheaper, and it'll be a good time to buy. But if we continue to bounce, if we get back above maybe 88k, I think then the bottom could be in. But one of the reasons that I could make that the bottom's in is that news dropping about the MSCI MicroStrategy thing. The timing of it just felt strange. Like, bad news getting dropped at the absolute worst price for Bitcoin in 7 months? We're back to April levels? Yeah, April the 11th. We've not been at this price we were at this morning. Bad news getting dropped normally happens at a bottom, and good news gets dropped at the top. So yeah, it just felt weird timing. I wouldn't bet against some massive moves this weekend, especially tomorrow night. Saturdays are ripe for market manipulation, and then obviously we've got Sunday night with the futures opening. And also there's the total unknown right now, and this is what I keep saying, is markets love clarity. So markets like to operate in a situation where they can kind of plan out the next 6 months. We're going to have rate cuts. We're likely going to be at this rate by June. Tariff policy, QE, everything, just a bit of clarity. And there is zero clarity in the markets right now. No one could tell you what is going to happen on Monday today, because Sunday night Trump could come out and say that he's tariffing India 100%, and markets would go into full-blown meltdown. Or he could come out and say, you know what, we think we've been too aggressive with tariffs, we're going to relax tariffs. Or he could come, like, we just don't know. I think that will settle down next year. I think it is by design. I think it is part of kind of a more structural shift, and long term it's going to be better for the economy and better for assets and better for investors. But this year has been tough in the markets for everyone. So yeah, I think we'll see how the weekend plays out, and then we can make a decision over if the bottom is in or not. I think this 74k area would be interesting to tag, but I also think if you look, I don't have it to hand, but if you look at any of the heat maps, any of the liquidation levels, anything like that, there really isn't anything below us in terms of massive liquidity, but there is a lot of buy orders at 74k, and I think a lot of people will just be hanging out the market hoping to buy lower, and normally that disappoints people. We've saw that in the past where even here, like realistically, back in April, we actually fell short of, we left this gap. So this 73.5 to 74.5, this $1,000 gap, the amount of buy orders that were stacked on these previous all-time highs was huge, and we missed that gap. Market makers don't allow people to just buy cheap. So yeah, it'll be interesting to see what happens. Will I long 74k? If we get to 74k, yeah, I would be massively long. Yeah, massively. Lee says he's picked a hell of a year. What a year to start. I think, to be honest, you learn more in bad times than you'll learn in good times. If this year was up only, I guarantee you would get wrecked. I guarantee you would make horrific mistakes and you would end up wrecked. Most people do. Anyone that invests in a good time, they think they're a genius, and it's just human nature. And unfortunately, they end up missing out on loads of gains, not selling, chasing tops. But because you've kind of been through a lot of the hardship, you'll know to secure profit. So actually, investing during bear markets, bad times, red days, you learn more, and actually it sets you up for success longer term than investing in good years, because good years just convince you that it's always going to be like that. All right, well, I think I've done more than enough talking. Hopefully we've tried to kind of paint a bit of a picture of what's going on in the global stage. Crypto is heavily correlated to macro. While most people hate that, unfortunately that is just the nature of being a maturing asset. It's not going to change. If anything, it's going to get more and more correlated over time. I do think the similarities between the 2017 cycle, 330% plus drawdowns, we're now in our third. That, to me, is a nice indicator. The bad news coming out today when we're at 80k after a brutal sell-off over the last week could be a bit of a signal, but I'll be waiting for the weekly close, and then we've got a big monthly close coming up with quite a terrible looking candle. However, if we close above 82k, then on the monthly time frame we're still in an uptrend. No market structure has been broken. So that's all for tonight. Thank you very much for tuning in. I'll try and jump on and stream over the weekend if anything happens. Probably try and tune in on Sunday if I can. And yeah, sentiment seems to have picked up a little bit today, which is good. Unless you're at an AGM, obviously. But yeah, hopefully everybody's kind of calmed down. These times are tough. We all get it. We've been just as frustrated as anyone. But yeah, like we keep saying, if you don't go through the hardship, you don't go through the 30% drawdowns, you're not going to be in an asset that appreciates 500%, 600%. And I think altcoins will do even more than that in the coming months. Unfortunately, it's just taking a little bit longer. But I will be back. Catch you all very soon. Thank you very much for tuning in. See you soon.